Hey, welcome everybody. Welcome to the closing beat. Basically on time today. Just checking to make sure my Halloween costume is going to be here on time. I don't know. I don't know if it's going to be here on time, but I'm excited. If it is, I'll wear it maybe next Friday. But here we go. This is the Closing Beat stock market update show that we do to cover the stock market, see what's going on for the day. Thanks for joining us here today. Hope you're having a great day here so far. We've got a little bit to talk about. If you can see on the right-hand side of your screen, you can see the stock market's down just a little bit here today. We like to teach. We're financial advisors that teach and like to kind of share ideas and thoughts. Got a really good watch list here for you today. Probably a little bit much for this, but we're going to go through it anyways, so I'll try to get through everything else a little bit faster so we can spend some time on that. Guess the Dow. You want to take a shot? Play Guess the Dow. You go to jazzwealth.com/guess the Dow. You can tell me where you think the Dow is going to close. If you're the closest without going over, we'll send you a $100 gift card. Ooh, he looks white today. And if you're one of our customers, we'll credit you $100 there. Also, remember yesterday at the end of the show, we were talking about those certain types of stocks, you know, that YouTube doesn't like me to mention. Guess who sort of flagged our video for not even mentioning it? So I've got something for you. When you want to talk about those stocks in that space that most people or the algorithms don't like us to talk about, I'm going to call them goofy stocks. So if you want to look up goofy stocks, there's some that we can look at today, but we will not use the word because the word gets censored, and when we get censored, we don't get the sort of posts that we like there, get ranked near the top where we like to, and we need all the help we can get, to be honest with you. We're not big enough to just say, screw you, and do whatever we want, and that'll probably get flagged, actually. Anyways, let's take a look at the stock market here today. Slight down day overall. You got Nancy Pelosi out on the day. She was saying, hey, it's not too late. She initially said Tuesday was going to be the deadline to get a deal done before the election. Today, about middle of the day, I'll show you if we can go over to the 5-minute chart here. Right here, this big blip in the stock market, right there was where she said, hey, it's not too late. We want to get a deal done before the election. So she changed her mind. She was excited. It seemed like everything was good. And it very quickly just floated away because Mitch McConnell said, nah, I don't think so. And so we just traded back and forth. It was a very choppy day. If you missed today and you weren't here, you know, it didn't really hurt you. If you take a look at the range overall, narrow range day on the S&P there, if we go over to looking at some of the performance inside of it, you have now 62% of the S&P 500 stocks above their 50-day moving average, which is the blue line on the charts. Facebook was the biggest contributor today. Stock was up 4% on the day, largely thanks to Snapchat's blowout earnings, maybe seen as a hint as to what Facebook may be able to do. Lots of daily active users there. PayPal hit new highs today on the crypto news, them being able to use the app to use crypto to buy stuff. Very fascinating, I thought, to see how they're going to program that. But that's what you got there. The S&P is up about 4% over the last month. Pretty exciting there. Pretty fast move for the S&P. And we've been just floating back ever since. A slight pullback so far, nothing too crazy. If we look at the NASDAQ there, also still waiting on, of course, big tech's earnings coming out. We've got Tesla, of course, to look at, up about 3.5% after hours. But you got the NASDAQ floating around there too. Somewhat of a narrow range day. Remember, the NASDAQ is up 35% year to date. Today, inside of the NASDAQ, Facebook was your biggest contributor, just like we mentioned a minute ago for the S&P. You had Netflix a little bit lower today after their earnings yesterday. Netflix and healthcare were the big drags, and in particular, biotech. If you look at biotech today, it was down almost 2%. This is the IBB that you can use to see the biotech stocks in general. But if you want to look at some of them inside of the market there, you got Alexion Pharma. That's going to kill me. Hold on a second. Just go over here. Yeah, I mean, I'm white enough, man. I'm half Puerto Rican, right? Half Puerto Rican. There it is. Now you got a little tan showing. Okay. Something about Alexion Pharmaceutical being the biotech stock that was a little bit weaker there on the day. Moderna was another one, if just coming to mind there. Down 4%, so biotech was one of the weak areas in the NASDAQ today, if you happen to be playing along. The Russell 2000 pulled back a little bit. This little sucker's been strong. It's been an interesting index over the last about a month and a half or so. It was the weakest today, correct? Yep, it was the weakest today, and it was all going to be because of small cap growth stocks. That was the weakest area inside of there. You got Winnebago, pretty interesting decline there on Winnebago. That's an earnings-related decline today, down 11%. Looking at some of the other stocks related to that industry, Camping World was also lower. I don't believe they had earnings just yet. Camping World and Kathy Ireland doing something together. That's probably from the profit. So anyways, you got 10% down on Camping World Holdings. And iRobot, also a growth stock in the small cap space, down 13%. That's going to be earnings. They beat by $2.27, weaker going forward, although they did raise their guidance there. So in the Russell, it's the particular, in particular, it's the small cap growth stocks that were the weak area of that index. Great videos this week on our YouTube channel. We do FinTips. It's FinTips series, short videos there. We're going to expand a little bit on this. I've got some good ideas coming forward, but Monday we talked about pairing together your 401k investments so that maybe the fees are less of a concern if you're getting the growth to outweigh it, and I gave a specific example to show you how to do that. Today we talked about withdrawal strategies in your nest egg, really, right? From your IRA to your 401k to your Roth IRA, all these accounts, HSA, things that you end up with when you retire. Well, how you take the money out makes a huge difference. Really, really good video. It's a little bit longer, but maybe something to take a look at. And Fridays are usually a pretty easy day for us. Fridays, we're going to talk a little bit about, or this Friday, 4 concerns of investors. The top 4 concerns that we've noticed after now going through just over 3,000 clients here at Jazz and seeing some of their concerns, right? I've kind of got my hand in every single one of those customers one way or another. And so notice a few things. We're going to address some of those issues on Friday. In our research site right there, we've got a couple posts coming up, but we've got a post on financial stocks bottoming out, particularly how do we look at those? How do we look at the sector and break it down into little industries and everything? Really cool kind of a research post on financials. And our Wine and Wealth class tomorrow now, we'll get it done before the debate in case you want to watch the debate there. I won't interrupt anything, huh? What's up? That's financial advisor jokes right there. That's not even a dad joke. Anyways, we're going to talk about balancing out the investments in all your accounts, right? So, you've got all these different funds and stuff. How do we make sure that they're all working efficiently together? So that's going to be what we talk about on Wednesday. Enough joking around. Let's go to the sector breakdown here today. On the right-hand side of your screen, you can see the different sectors and how they performed on the day. I'm going to skip around a little bit today and go outside of the sectors, go to home builders. This is an industry inside the S&P here that you can sort of sub-break the market down into. And you got a 2% decline on the home builders. A little bit of a pullback. They've had a great run. A lot of people looking at this prior high. Technical traders, 54.75 on the XHB. Maybe another day or two pushing into that area. I think you'll find a little support there. You've got some of in particular, the main home builders. Pulte Homes pulling back a little bit on the day. You got Toll Brothers pulling back off the highs. Been a real strong stock, so these are welcome pullbacks. Dr. Horton, also a welcome pullback, maybe just a touch weaker than the rest of them. Lennar moving back to the 50-day moving average as well. Now, sector-wise and industry-wise, we'll start with the sector. You got transports here. You're in the middle of a uptrend, right? You can see that. That's clear as day. We've got essentially a pullback happening in the middle of an uptrend. There are a lot of sectors that look like this. There are really 2 different types of S&P sectors right now. There are those that are in an uptrend and pulling back. That's okay. We welcome that. And then there are those that are moving sideways. Those are the ones that worry us a little bit if you're going to break it down and try to take the 10,000-foot view there. So we look at transports. They're sort of pulling back in the middle of that. You got consumer discretionary pulling back in the middle of an uptrend as well. Retail pulling back as well. They've had a great run. The last month has been really good for them. Also, relatively strong compared to the S&P, meaning it hasn't fallen as much, so positive sign there for retail. We'll look over to communication services. They took the top spot today, up 1.7% on the day. That's going to be because of the pop in Facebook there. Also, I'll note that social media stocks did well today. Twitter up 8% on the day, largely due to Snap Inc. or Snapchat's earnings. They were up 30% thanks to a nice beat on earnings there. They beat by 6 cents, actually turned a profit. Revenues came in better than expected. Daily active users up, I believe, 50%. It was a magic number there. Huge. A lot of people spending time on that one. So looking good there. Facebook is the next to report. They will report next Thursday after the market closes. And actually, Twitter is the same. Twitter's going to report next week as well. So there's going to be a lot of excitement around those 2 stocks. We'll keep an eye and keep you posted. Regional banks. I keep pointing out that regional banks are the stronger area of the financials at the moment. So you have the S&P 500. You can zoom into the financial sector, and then inside the financial sector, you can actually zoom into the industry, which is the regional banks. So when you look at the financial sector as a whole, there's exchanges, there's the regional banks, there's the credit issuers and things like that. Well, those are really sticking out in here. And what I want to do is I'm just going to share this with you for better or worse here. Let's see if I can pop this up. What we did, if you go into our research site here, I don't mean to keep promoting this, actually I do. If you go into the research site, we actually broke them down by category and showed the best performers in there. So we gave you all the data, gave you a quick lesson on that. Probably doesn't come through real clear, I'm sorry about that. But if you want to go in there, check that out, because we kind of gave you a quick little research post on that, and that's currently where the regional banks are. They really stick out there. You got to learn how to spot that stuff, right, inside the individual sectors. Moving along. You've got Mexico. We talked about this one yesterday. Mexico waking up. It, of course, looks a little bit better today. Added about 1% on the day, getting a little bit more attention and more volume. Emerging markets came up numerous times across the investment world today. Emerging markets hitting about 0.3% higher on the day. Now, the key here is whether you agree or disagree with China being an emerging market, they are the ones moving this higher right now. Alibaba, one of the biggest contributors of the performance in the emerging markets. JD.com, we happen to own that one. We're excited to see that. This one, the performance of this one, also helping to be one of the bigger contributors. If you look down the list, you got NIO. NIO's actually, obviously, it's done really well there, gotten a lot of attention. And we mentioned Pinduoduo a few times. We happen to own this one as well. Great recovery off the lows, and obviously great performance for the year. And so we're happy, of course, but it's also makes the emerging markets area quite happy as well. So I just wanted to point that out. The rest of the sectors on the right-hand side of your page you can take a look at and enjoy quickly, because we're moving on. All right, so notable new highs for the day. You had 19 new highs, no new lows. I just want to check Gilead Sciences real quick. It almost made a new low. It just refuses to bounce off those lows. That is currently the stock that is closest in the S&P 500 to making a new low. It's been on the list a couple times. Estee Lauder. There you go. We actually covered this last week in our portfolio update for customers. We happen to own this stock. It's doing well and continues to do well. I'm a little shocked by that, but I'll take it. Up 3% on the day. That's a notable new high because it has broken out over these highs. The volume is there. The excitement is there. The sector is showing the industry is showing relative strength as well. And of course, you like to see that. PayPal breaking new highs as well. Good day for them with the crypto announcement there. So that one's notable for sure. Avery Dennison. You would know these guys if you've ever printed labels from your printer and then took them out, stuck them on an envelope or whatever. That's pretty much these guys here. Great earnings report, I believe, for them. They beat by 41 cents, raised guidance, revenues came in better than expected. The top three things that people look at generally for earnings, they killed it. They did really well. Volume was good, up 6% on the day. That's a notable one there. Paycom finally pulling back. We own this one, so we're feeling the pullback, and of course I think it continues. But I wanted to point this out because we were talking about this thing topping out and finding a top there. If you can spot that sort of thing, it doesn't mean you're gonna go make millions of dollars. For me, it means that you might get your mind right. If I can get your mind right about the markets pulling back or potentially seeing some weakness there, and you think that ahead of time, then when it happens, you go, great, I thought that would happen, and that is happening. Wait a minute, I should do something about that. So Paycom's starting to pull back. I'm actually excited for that. I don't like when stocks go too far too fast. And UPS, thought that was a notable day today. It did hit new 52-week highs, but like yesterday, we're saying we don't mind if this goes sideways and chops around for a while. That's ultimately becomes a better reason for a better breakout. So I'm sort of thankful that UPS didn't do anything today. And that's it. One last thing, was it Avery? They're the ones that beat on earnings, revenue, and raised their guidance. They also raised their dividend to 62 cents. That's about a 7% increase in their dividend if you happen to own it or be interested in owning that one. All right, let's take a look at our watch list today. I'm going to spend a moment on this if you don't mind. Got some interesting stuff here. Oh boy, do I have the stuff? Oh. Yep, okay. Woo, there we go. All right, let's take a look at what we got. Over the next 2 days, this is the list of stocks that are reporting earnings. Yeah, it's a big list there. 124 names will report earnings over the next 2 days. How on earth do you go through a list like this? Well, we categorized it for you, and I'm going to show you kind of how we look at it. We've got the ticker symbol here. First, you got the company's name, in case you're not familiar with them. We've got the date that they report earnings. Then the next column is, do they report in the morning or after the market closes, because the performance to the right is going to reflect that. We also have the look back period. How many data points were we able to grab? So in this case, for like Citrix or American Airlines, it gives you the amount of data that we were able to pull. We then ranked them by the amount of times that they beat on earnings. We had to sort this somehow. And so, for example, like Citrix or LogMain, They beat by 93 and 98% of the time on earnings over the following look-back periods there. Hopefully you can see that. Revenue beats, we got them not ranked, but we color-coded them so you could sort of match them up and say, well, Monolithic is pretty good, and Danaher does pretty good. That's good news, actually. And then we put their guidance. A lot of companies don't give guidance and haven't given guidance in various different economic conditions, but we put that there just to help you out. Okay, next thing. We want to know if a stock normally is quite volatile when we own it through earnings, right? It's just one of those things to know that we would focus on that stock. So for example, if we owned Anika Therapeutics, it is the most volatile at the top of the list, or at least closest to the top of the list. And so if we owned it, we would say, okay, we know to expect something crazy. We want to position size ahead of time. We want to make sure we're not overcommitted to that stock, or make our decision before earnings, which comes out on the 23rd, which is 2 days from now. So we've got that in there as well. Now, this column here is the average gap, right? Gaps can be shocking because they could technically trigger orders if you have market orders in place, if you have a gap that happens before the market's open. So for example, I'll use Citrix, right? They're one of the ones that'll report the soonest there because they report tomorrow in the morning. All right, so Citrix beats most of the time. The average gap is 1.24%. Okay, cool. We can handle that. Anybody can pretty much handle a 1% gap. You're not going to be scared one way or the other. That's average, by the way. Now, average open to close performance, we've talked about this in the past, is negative, and it's negative 0.1%. Wait a minute. So if the stock gaps up an average of 0.25%, but then closes from the open down, that means that this stock tends to get a little excited in the morning and fade away throughout the day. That might be something interesting, because what do we have with the stock market right now? We have a stock market that's starting exciting. Overnight's positive. Last 3 days, the market's been up, but it faded away throughout the day and didn't finish near its highs. What happens if we have a stock that reports earnings and does well, but the markets fade away on that day? Statistically, this one would fade away as well. Average full day gains 1.16%, volatility at 6% basically. So that tells you overall we do not have to worry too much unless there's some way outside of the box shock on this stock. So what we did is we put the list on the right-hand side of your screen to go over the stocks with the best beat rate and the smallest earnings move. The idea is not to have a portfolio that we're scared of. We just want to know what to expect. So first on the list is American Airlines. You can go see it right here. I'll try to give you one of these guys. American Airlines tends to beat on earnings most of the time. Revenue's been an issue over the last few data points there. Average gap is very small. The average open to close is very small. It is unfortunately a negative performer typically on earnings, but the volatility is very low. So not something that we would have to sort of freak out about. Checkpoint's the next on the list, going in order here. Not down the list, but on the watch list there. Checkpoint beats on earnings and revenue, I would argue pretty good amount of times there, 88%, 76% of the time. It has a very small average gap typically, tends to wiggle around very little, but performs better after the gap. Average one-day performance is just a touch higher, and volatility is very low, so we're not worried too much about that. Northrop Grumman ranks in the mix there as well, has the lowest volatility, I believe the lowest out of all the stocks I'm going to share with you here today. You can verify that by looking at this list. Great beat on, or great performance on earnings, so it's near the top of our list there. The average move is very quiet, average gap, the average volatility during the day very quiet, and generally volatility very low. If you own Northrop Grumman, you are not too concerned. Carnival, which could be interesting because they've got a lot to report. Carnival Cruise Lines beats nicely. We're already expecting sort of not great from them, but it's typically not that volatile on earnings, even though we're in a volatile time, so something to consider there. Carter Holdings, there we go. Same thing. On the lower end, it's not the lowest out of the group there, but tends to have a very muted response to earnings, and we're looking back many, many quarters, 67 quarters in this case. That's what this means, by the way. Yeah, so that's 67 quarters of earnings, not 67 days or whatever it is. So quarters. Very small in terms of performance there, not too big, not something we have to worry about. Penske Auto, you know what they do, Penske Trucks, Leasing and Sales. Average gap is okay. It's not the smallest out of the group there. Tends to float back just a little bit after reporting earnings, so we know to expect that. Average one-day move is never typically not that large, and if it is large, it's very muted and not too crazy there. I also put on Fifth Third Bank. Actually, I'm going to jump over to this guy here. What I did is sorted the list by notable earnings reports for the rest of the week, meaning names that will likely get attention from the media or names that investors like to look at as far as when they report earnings. So if we look on this one, Fifth Third will be our final group in there with earnings not too good, but but either way, the stock tends to perform pretty flat. So we know not to worry about that one. Citrix would be one you want to look at, most volatile there. And of course, Boston Beer, they have had a rough time through the coronavirus there. But in particular, over the lifespan of their 64 quarters reporting, they tend to be the second most volatile out of the key names that are reporting for the rest of the week. I also put Pool Corp on the list there. PoolCorp is new to the S&P 500, but not new to the markets. They've been public for some time now, and they actually went public like a year after starting. Really rapid growth there. We highlighted this in our research section if you want to take a look at it. But PoolCorp has a pretty flat response in terms of earnings. Sometimes they beat, sometimes they don't. But it's also pretty flat in terms of movement. That I expect would be more elevated this earnings season, because now we're talking about the S&P. We're talking about a whole different grouping of companies that are a whole different grouping of investors that own this stock and will be paying closer attention. So that's that one. You've also got Capital One in the mix, American Express as well, as far as the credit issuers reporting, and then a couple others. I thought the railroads would be interesting to look at because the railroads have been one of the stronger ones. And then we put the rest of the airlines in there as well. Alaska Airlines reporting tomorrow, and you've got Southwest Airlines doing the same. And interesting, not on my list. So anyways, you got that. And then the home builders we talked about, Pulte Home Group, pulling back today. I put that in there as well because the home building industry has been pulling back a little bit. So we'll see, with all the excitement around home building, new home starts and mortgages and all that stuff, will they be able to get a bounce off of that? And lastly, you got Tractor Supply, just to add a ton more stocks to your list. Tractor Supply has been a beast. Remember, that's a really, really strong one there. So Tractor Supply, trading at highs there, looking to break out over new highs. Could earnings do it? It could, but we know that the average move is actually quite muted there. Average gap less than 1%, average full day move not even 2%, volatility very low. So we don't know that earnings would cause the gap to new highs. Surely they could knock it out of the park and do something there, but that's what we got there. Also included Coca-Cola because we talked about that yesterday, trying to wake up as well. We'll see what happens, but that is your watch list for the week. 124 names in just the next 2 days, and that's not even the highest number of stocks to report earnings over a 2-day period. So we're going to keep continuing to cover that. Let me know in the comments, not here in the live stream, but in the actual comments, if there's something we could focus in on for you. This is just the way we like to organize the data, but maybe there's somehow we can fine tune and look into things a little bit more detailed. That's our watch list for the day. I hope you enjoyed it. If not, I don't know if you're still around. But what I'm going to do is talk about stocks in the news here today and move on and see what we can do for you. Texas Instruments, this is going to be earnings related. They attributed some of their demand, actually. I believe earnings was good. Beat by 17 cents, raised guidance, revenues better than expected. They attributed some of their forward guidance to the recovery in the demand for trucks and cars and stuff. I thought that was interesting. You don't always hear that out of them. Anyways, you got General Motors a little bit higher on the day. They unveiled their new electric Hummer truck. The new Hummer truck. I thought it was supposed to be $77,000. It's $112,000 with the potential of maybe having a cheaper version for $89,000 later. Also, it's kind of an ugly truck. What do you guys think about this thing? I said the same thing about the Tesla truck, and I get it. I'm just not forward thinking or whatever, but boy, these electric trucks are not very attractive, are they? I mean, why do we have to change it and make it look so weird? That's what you got going on there. Verizon back below the 200-day moving average. They beat on earnings by 3 cents. It's typically a very slow mover. We talked about this as being one of the least volatile stocks during earnings season. You can go back and look on our show there. And it lived up to its history. It was very limited. The day's range was larger than expected. But in general, just a nice little day there for Verizon. Pulling back there, starting to look attractive, by the way, if you like buying those dividend stocks on discounts. Biogen, slight uptick today. So Biogen beat by 77 cents. They did lower their guidance going forward, but they're doing a $5 billion share buyback. Investors always like to see that. It's a little bit higher. Lastly, you got Slack. Did we put Slack on the list? We did put it on there. Down 6% on the day. It was downgraded by Morgan Stanley to $27, which is not much of a downgrade there, but it was the comments that Morgan Stanley gave to say that the stock has a weakening position in the marketplace thanks to things like Teams, Microsoft Teams. So they said it's going to be tougher and tougher for them to compete, and they don't think the stock price is worth what it is. That's what they said. Tesla. All right, so Tesla is going to be up $14 after hours. They did beat on earnings. All's looking good there. The question is going to come up again at some point if it already hasn't, whether they'll be in the S&P 500. Currently trading out at $436. That's a slight uptick from today's close, $14. Looking good there. We'll cover it again tomorrow. If you have questions, I'll take your questions, see what I can do to try to answer them. In the meantime, while we let the stream catch up, earnings tomorrow. You saw the list there. American Airlines, Danaher, Kimberly-Clark, Kohl's, Coca-Cola, Pool Corp, AT&T, Union Pacific, Capital One, Intel, and Seagate Technologies. You got dividends coming out, 78 cents from Procter & Gamble, Williams-Sonoma, 53 cents, and Colgate, 44 cents. Your typical dividend payers there continuing to pay their dividends. And I just want to see... So my Halloween costume is en route. All right. Yeah. I'm just checking. Anyways, what can I do for you guys today? Comments on Netflix earnings. They have an excellent edge in streaming services in spite of Disney Plus. If you feel that way, then you like the discount here today. It's obviously very competitive and very cost prohibitive. They're gonna ramp up to spending $20 billion on production. Granted, that's all they have to do. The technology's there, everything's good. There's some concerns there. In production, obviously, they're getting back on track and everything for new releases, but yeah, there's going to be real competition. I don't doubt that with Disney Plus. And Disney Plus, or Disney's also, I think they're getting rid of Hulu and sort of merging everything into one there. So we'll see. It's definitely going to be a lot of competition there. And it was technically the most volatile stock so far on earnings, which is technically its history there. Yep. Thoughts on the solar industry, not a sector, but solar industry, very extended in the short term and finally pulling back. So all the stocks in this category, I only know because we own like Solar Edge and stuff, they got ahead of themselves, too far, too fast. So you can't look at that and say, yay, it's going to continue forever. Many of these stocks started pulling back. Welcome pullback, by the way, but it's no reason to start diving into it just yet. You got to let it settle down. Never buy it on the first day. We've talked about that one. So I like the industry. I like what's going on there. Obviously, like the momentum, but I do not like any idea of starting a new position in there. I wouldn't. Yeah. Yep. Verizon. You like Verizon? You like that discount? There you go. Well, a lot of people look for pullbacks in Verizon to scale into positions because they like the dividend. They got a stable history of paying dividends. You might like the 5G prospects in there. You could argue that they was already priced in. Now that we know. But the pullbacks here people like. It's not a wildly moving stock, so anything in the low 50s is obviously attractive. And that's not my opinion. That's just how the stock gets treated. Chipotle to new highs there. Yep, looking good. They've got earnings as well. And then the question about Algen. It's the same as yesterday for Algen. You know, it's just chopping around. It's looking good. There's nothing negative to say about it. But how do you justify putting new money to work there? We'll see. Is the costume wrestling related? No. You'll see. I'm gonna put it on. I'll wear it for the show. I hope if it's here by next Friday, then I'll do it on the Friday show. If it's as cool as I think it is, it's gonna be pretty fun. So we'll see what happens there. Nope, no Disney in the news today. You don't get a Disney fun fact every day. You get a Disney fun fact when we keep it in the news, right? So that was just a side topic there. When it's in the news, I'll share them with you. I don't have a million of them. Just feels like it. It feels like. Yeah, I mean, I got a lot of them, don't get me wrong, but it's got to be in the news. We have to be talking about it already. The solar, no, just pulling back. I have nothing bad to say about solar. That is an extended pullback. Yep, I like it. I like it. Thoughts on Peloton? No, not leveling off. No. Okay, so maybe we'll have to do a class on this. There's a difference between an uptrend and an extended uptrend. And these types of extended uptrends, they pull back hard like this because those are the retail traders that think something is wrong. Nothing's wrong. It's just time to take some profits and let it pull back. Stocks do not like to be extended from any of their moving averages. And when that happens, it is always short-lived. Always. So that's not an opinion. You can look back on anything. Rattle off a random stock and we'll find out any point where it got extended like that. So careful on those. It is not leveling off. It is hopefully just getting started, pulling back for those that want to buy it. And hopefully that's the case. All right, I will wrap it up there. I do appreciate you guys hanging out with us here today. Let me know. Comments on the show. What can we include? We're data oriented, so hopefully something data oriented to improve. We're kind of changing up the segments just a little bit there, but just trying to bring new stuff. Maybe have some cool tools that will be done soon-ish that we can incorporate with the thing. No, he's not paying attention because he's working hard on it. All right, I love it. Enjoy the rest of your day, and we will talk to you soon. Thanks so much for watching.